We get the inflation rate last week that came out. The year on year continues to fall. The Fed looking to cut rates sooner rather than later. Over in China, industrial and retail sales came out, and that disappoints everyone. We've then seen the inflation rate came out, and that inflation rate came back 0.4% to 2.5%. Now that brings us back into sort of something, a bit of a comfort zone. And remember, we've gone from 9% to 2.5%. And when you look at that inflation rate over the course of 8 to 12 months, you can see that the Fed's policy of high interest rates is actually sort of working well. The key thing that we're trying to get a measure on is, is the economy going to weather this successfully? Or is it going to sort of move into a recession? And you can see the pressure starting to build from the actions by the ECB in terms of their action to cut rates, and also in China, when you look at the numbers that they had, retail sales, industrial production, all disappointed everyone. So as a result of that, we've got this pressure on the states to actually lead and see whether the states will actually lead the rest of the global economy, because that's not in recession yet. But let's see what actually happens there. And I think that the key here is also, which is also supporting the equity markets. And mind you, that was a massive turnaround, in terms of being super weak to super confident. And this week, we do have retail sales and industrial production out of the States. That's going to be super keen to watch out. But the most important thing is the FOMC meeting that comes out or announced on Thursday. Now, that's going to give us a big clue in terms of how the Fed is feeling, about interest rates and how it's affected on the economy. And also the wording after that's going to be super important, because I think when you look at it, it is really all about sort of saying, well, if we get 0.25%, I think that's pretty moderate, and I think that's what the market's looking for. But if we get 0.5%, is that going to send a message to the market that actually says, well, look, things are going to slow down a lot quicker, and there is this chance of us going into recession? So as a result of that, then is there something that equity markets then might come under pressure? We are on record highs there. We're also on record highs on gold, and also the US dollar is under certain amounts of pressure. So I guess when you look at it, when you look at there's a comfort starting to happen. There's a comfort happening around how the election's going to revolve, and I also get a feeling that comfort zone sort of is supporting those equities for the time being. And in my mind, regardless of the production numbers, elsewhere where we're seeing sort of a slowdown occurring, it's not happening yet in the States, but I think the Fed is quite concerned. As we mentioned last week, Fed Governor Waller came out and said, look, we think we're going to have 0.5%. I guess the market's saying 25%. The odds have picked up just recently to 43% that we'll get a 50 basis point cut. And I think that's also why we're seeing this drive in equities. So to me, that's something to Thursday we find out. Now, we've got obviously the US, big numbers and big things there. But over the weekend, we also had some Chinese data. And the Chinese data came out saying it's the largest economy. But, we have a picture there where we've always said, well, okay, let's try and get some growth happening. Let's try and get some growth, the green shoots of recovery. Now, pretty disappointing across the board. We had industrial production growth was 0.6% decline from the previous reading. Retail sales dropped from 2.7 to 2.1. And I think these figures suggest that deflationary approach in China is staying there. And it doesn't matter what the People's Bank of China put at it. It's not really doing what it's meant to do. And I think a lot of those roots come into really also where the property sector is going, because when you take a look at what's actually happening, that housing index, remains super under pressure, and it's the 13th consecutive fall in housing prices in China. And we're going back to negative levels since 2014. So I think when you look at it, that is a concern, because we've already had the likes of Evergrande, we've already had the likes of Country Gardens. All these concerns have been there. But are we going to see more? And is that going to drag that mag or keep such a depression? Now, remember, the property sector in China accounts for close to, a third of GDP. So very important there to see what's happening there. And at the moment, Please subscribe to our YouTube channel and click like to inspire you to take trading actions.